All right, let's get right into it. When you take a look at Bumble's latest financial report, you're looking at a really fascinating puzzle. So what's the real story here? Are we seeing some clever financial engineering, or is this a genuine strategic turnaround in the making?
So, on the surface, things look, well, they look pretty alarming. The company reported a net loss of almost $900 million for the fiscal year. Now, a number that huge, that would typically send any investor running for the hills.
And yet, that's not what happened. There was no mass exodus. The market actually reacted with a kind of cautious optimism. So what on earth did Wall Street see that wasn't in that massive headline number? That's the central mystery we're going to unpack right now. Well, here's the other side of the coin. Even with that gigantic loss, Bumble actually generated over $250 million in cash from its operations. So you've got to ask, how can a company lose nearly $1 billion on paper, but still be bringing in that much cash? The answer, it turns out, is all in the accounting. Yeah, it really all comes down to one massive accounting move, a $1 billion write-down that completely changes how you see the company's performance. Okay, so the key idea here is something called an impairment charge. I know, it sounds super technical, but it's actually pretty simple. It's a non-cash expense. Just think about it this way. If your house's value on Zillow goes down, did you actually lose any physical cash from your wallet? No, of course not. But on paper, the asset is worth less. That's what Bumble did with things like its brand goodwill. It's an accounting move, not a real cash drape. And check this out. This shows you exactly how the math works. You start with that big net loss, right? The nearly $900 million. But then you add back the stuff that wasn't actual cash. Most importantly, that impairment loss of over $1 billion. You make a few other tweaks and boom, you land at over $250 million in positive cash flow. This tells you the company's ability to actually generate cash is way stronger than that scary loss number would have you believe.
But look, this accounting reset wasn't just for show. It was a direct result of a huge pivot in Bumble's core business strategy. They're making a really clear move toward prioritizing quality over quantity.
And this table right here tells the whole story. Take a look. The total number of people paying for the app actually went down. But, and this is the crucial part, the average revenue per paying user, or ARPPU, for the main Bumble app went up. See what they're doing? They're making a conscious choice to focus on a smaller group of users who are more willing to pay for premium features. So yeah, the pivot is crystal clear. The old playbook was all about volume. Just get as many people on the app as possible. The new strategy is all about margin growth, making more money from each user who's really engaged with the platform. So, how do you actually convince people to pay more? Well, Bumble is making two really big bets to justify that price tag, investing in some serious AI and doubling down on what makes their brand unique. And we're not just talking about minor tweaks here. They're pouring money into their tech stack. This means everything from smarter AI for better matches and safety to using generative AI to help you write that perfect opening line. It's all designed to create a better, safer, and more valuable experience that feels worth paying for. And along with all that tech, they're going back to their roots. This quote from their 10K filing says it all, really. Their entire mission, putting women first to make it a better experience for everybody, that's not just some marketing slogan. It's the absolute core of their identity, and it's their main defense in a super crowded market. Okay, so that's the strategy driving the numbers. But what does all this mean for the future? Let's take a look at the long-term outlook. The company's laid out a pretty clear roadmap. They're planning to push into new markets like Europe, Asia, and Latin America, keep rolling out new features, and use what they know about marketing across all their apps, all with the goal of improving those long-term profits. But of course, it's not a slam dunk. The dating app world is fiercely competitive, and as the company built on a specific mission, they're super vulnerable to reputational damage if they mess up. Plus, anytime you're leaning this heavily on new AI, there's always a risk that things could go wrong in ways you didn't expect. Which brings us right back to where we started. Financial engineering or a real growth strategy? You know, the honest answer seems to be it's both. Bumble used a big but necessary accounting move to show the world that it's making a very real and very deliberate shift in its business. So there you have it, a quick look at the strategy behind the headlines. If you want to go even deeper, you can visit www.HDINresearch.com to read the full 20-page strategic report.